What is up, guys? McKay back here with another episode of Lucid Daily. And guys, we have a lot we need to go through. Not a lot, actually. One big thing that we need to talk about that I think that this may be one of the reasons that Lucid fell into the after hours. And I initially didn't want to make this video just because I'm gonna have to wake up early tomorrow. I have to drive for 3 hours, but this is too important for me to pass up on. And I am here to bring you guys as much value and as much information as possible from a perspective as a Lucid investor and as somebody that tracks the market very closely on a day-to-day. So today we're going to talk about exactly what happened and what this Barron's article is talking about with Lucid. We'll talk about the stock price action and everything in between. But let's go ahead and dive into exactly what's going on here, and we'll talk about the article in depth here in just a second. Let me go ahead and share my screen with you guys, and let's go ahead and get started. So Lucid was down 0.47% today, down 0.16% in the after hours. Again, a relatively flat day for Lucid. They are up about 20% this. Let me double check. They are up 20% this week, I believe, or this month. They are up 20% this week, and they are up 10% this month. So they have had a relatively decent week and month considering what is happening in the macroeconomic space. But still, Tesla was up 4.5% today, and the SPY was up 3.1% today. So the SPY did outpace Lucid today, which was a little peculiar. Lucid wasn't necessarily down a ton, but it was just peculiar that they were outpaced by the general market today. But there wasn't really a rhyme or reason. Sometimes things happen internally that we just may not know about. But there are things that we do need to talk about today regarding Polestar, regarding Ross Gerber, and regarding Barrons. So let's go ahead and dive into it. So there was an article published about 4 hours ago. That's about 4 hours after the market was closed on Friday, June 24th. And it is about 10:30 at night, June 24th. But like I said, I wanted to get this video out. So the article starts off by saying, that Polestar gained 14% after the EV company completed its merger with the SPAC the day before. And they say that's bad news for Lucid. Now, I did a terrible job at covering Polestar on my main channel, so I apologize about that. But they had their merger. They are now trading under the ticker symbol PSNY. And if I believe they were down 6% in the after hours. They were relatively flat on the day, and they're up 46% in the last 5 days. So again, congrats to everybody that's invested into GGPI, who is now Polestar. All right. So they say the reason for this that Lucid's in trouble is because Polestar makes Lucid stock look way too expensive. Polestar has about 2.1 billion shares outstanding, giving the company enterprise value of roughly $26 billion. That prices Polestar at 3.9 times earnings, 9 times projected 2023 sales of $6.6 billion. And then they talk about how Lucid's valued way higher with 8 times 2023 sales of 3.5 billion. So they're saying, like, and I've been saying this for a lot, Polestar has really good numbers, and it's always confused me why Polestar is traded slightly cheaper than most of the EV stocks, despite them having relatively strong sales numbers. So the article continues on saying, like, why is Lucid more expensive? And they're saying because the Saudi Arabia probably is the biggest factor that Lucid is so expensive. People are assuming that Saudi Arabia is going to bail out Lucid or just continue to fund Lucid in the case of any event, which could be largely true. But they're saying that this may not be a good thing for Lucid. This is what Barrons is saying. They're saying that Saudis do have a history of funding toxic ventures like the LIV Golf Breakaway Tour, which has been criticized for bringing irrational competition to golf. So if you don't know, Saudi Arabia is like sponsoring, funding, starting up a new golf league that's instead of the PGA Tour, which is the most well known. The Saudi Arabia is starting their own, which is the LIV Golf Breakaway Tour, and they've attracted a couple of big names, and a lot of people have not been very happy with that. One of those people being Ross Gerber. Now, why they picked Ross Gerber's brain on this, I don't know. It was interesting. They probably asked him about Polestar, and he probably gave him some insight, like some info on Lucid, and they're like, "Oh, we can make a piece on Lucid." Anyways, he says Lucid is the LIV tour of EVs, meaning like they're the outcast at EVs. They're like the red. They're like the person that people. They're the EV company that people don't really like because they're kind of doing things in an unconventional way. He says it can't and won't make money. And then it ends off by saying if Lucid were to trade like its peers based on 2023 estimates, it could fall to about $7 a share, down 64% from Friday closing price of $19.21, which is what we just saw. And the stock has already fallen 73% from its 52-week highs of almost $58. So there we have a fairly bearish article regarding Lucid and everything going on with it. Now, one of the biggest things is they're saying that the high-end EV market is relatively small and that Lucid will not have a lot of demand going forward. And I do agree with that. However, I'm going to put a little asterisk there. Not necessarily that that portion of the market is small, which compared to what the other parts of the market is, yes. But what gives me the most hope is the fact that Peter Rawlinson is really going for a $25,000 car by mid-decade of 2025. Because even the Air Pure is about an $87,000 car, which it's about the price of a Model Y, about a little bit more expensive than the Model Y. But it's not a crossover. So the Air Pure is obviously going to be a revolutionary vehicle, and I'm really hoping that Air Pure will be Lucid's main vehicle, that they can have hundreds of thousands of sales by the time that we're into 2025. But we need to see the factory continue to ramp up. The game plan is there. They're going to use like the Air Pure, the Gravity, all the way into 2025 to hopefully get to this $25,000 model that Peter Rawlinson has hinted at multiple times. They talk about how if they were going to trade, that if they are trading for their peers estimates, they'd be about a $7 a share stock. And that is, you can take that, but I think the fact that Saudi Arabia does provide a lot of funding is something that does prop Lucid up in a good way. I mean, like having that constant reassurance that you have one of the most wealthy countries backing you may be a positive thing to a lot of institutional investors, and that's why it is trading for such high multiples, because not a lot of EV companies have that. Hardly any do. So keep that in mind. The next thing is we need to continue to see reservations go up. We need to continue to see the Air Pure. It is critical that we have the Air Pure come out Q4 or Q1 of 2023. Ideally, we want to have some Air Pure out in Q4 just because that's what the company has been saying. And if not, we need to see it ASAP. Obviously, I mean, Lucid's a young company. They've only been in production. They're 3 quarters into production now, or 2 quarters. They're on the 3rd quarter of production. So again, in terms of like a company's age, they are extremely young, but we still need to hold them to what the market is trading for, and we need to continue to see them execute their plans. So be patient. Lucid needs time. I'm really hopeful in that $25,000 car. Lucid needs to get into the lower market because, like, I think that concern that the luxury EV market, that I think that concern is valid. But with that, we do know that that's not where Lucid plans to stay, and that's actually not Peter Rawlinson's dream. Peter Rawlinson has said that his dream is to get to a more affordable $25,000 car, which would be absolutely revolutionary if they could mass produce a $25,000 car. That's where Lucid has its potential. Like if they can crack that $25,000 car, that's what will differentiate Lucid from any other EV car company, because there aren't any other EV car companies that are making a high-end electric vehicle for $25,000. Like that would be insane if they're able to do that, when they're able to do that, and how soon they're able to do that. So those are a lot of factors. I just wanted to address this article because you're probably going to be seeing a lot of things on Twitter about it. And you're probably going to be seeing CNBC react to it. And you're going to be seeing a lot of people talk about this Barron's article. So I just kind of wanted to get in front of it, even if it is a little bit of a later episode. I'm glad I was able to make this for you guys. If you guys have any questions, consider leaving them down in the comments. And if you're new here, consider subscribing. We cover Lucid on a daily basis. I try to provide middle of the road information where it's not like Super Bowl, but it's also not super bear. I try to be Lucid's harshest critic and provide insights into how Lucid can continue to improve and some certain things to look for. So I hope you guys enjoyed it. And if you guys are looking to support the channel, I have had people ask how they can support the channel. A great way is hitting that join button right next to the subscribe button and becoming a channel member, where we will be rolling out incentives. So I hope you guys have enjoyed this video. And like always, we'll see you next time. Thanks for watching.